Good morning and welcome to Almus Market Mornings, your daily dose of global financial updates. Higher for longer got one more data point watching for it, and that's the US PPI inflation, which accelerated for the month of September. What's concerning is that the potential rise in energy prices can further accelerate this number. But since the time the war started and the initial spike in oil prices, we are seeing the commodity subside a little bit. We are also witnessing good buying in US treasuries as well as gold. Good morning, JK. How are you reading the PPI numbers? Keen to hear your thoughts.
Good morning, Swaraj. Yeah, PPI headline number was definitely higher, but that was kind of expected because the crude oil prices have gone up in the last 1 month. But if you look at the PPI prices, ex food, energy, and trade services, the inflation was actually lower than expected and lower than last month as well. And you also have to take into account the fact that oil prices have really not gone up that much, even after the war has started over the weekend. There has been a report in New York Times which says that US intelligence understands Iran was surprised by Hamas attack on Israel, and that may this belief might reduce the chances of additional sanctions on Iran oil and help prevent the nation and its proxies across Middle East from being drawn into the conflict. So basically, Iran participating in this war might be much lower probability, and that's why the even oil prices have come down. In fact, market is now more focused on the CPI number, which is due today. But overall, the treasuries got a boost. I mean, the yields lower yesterday with the safe haven bid after the Middle East war, and also aided by dovish comments that we have been hearing from Fed speakers helping it. The bonds have taken a strong downward trend, the prices, I mean, to the relief of investors and businesses. Starting its move past US jobs report on Friday, we have seen 4 sessions of fall in the yields. 30s have moved from 505 to 469. 10s from 489 to 455, and 2s from 515 to 4.98%. And the excessive term premium that was being built into the bonds, long bond, has actually been taken off. Meanwhile, the Fed minutes did not show anything different from the statements after the meeting and the dot plot. Anyway, the minutes have been superseded by the recent Fed comments by various speakers as well. If anything, there seems to be more inclination among majority of the members towards the economy for effects of current high rates, and slightly highlighting the risks of over tightening as well. The other data released today, as I said, the PPI did show mixed bag, but yes, I think market did not take much note of the PPI, excepting a little bit of uptick in the yields, which was again corrected down. We also had a ECB survey yesterday, which showed households feeling inflation to remain higher than the ECB target of 2% for at least another 3 years. And while there seems to be less consensus among ECB members about peak rates being in, this is comparable to Fed, where more majority is looking at the rates already being peaked. Similarly, though BOE has passed last month, I mean the Bank of England, reacting to a sharp fall in the monthly inflation, the rate of price increases at 6% is still much higher than their target, and more action from them cannot be ruled out in this regard. So these factors have actually supported the euro and the GBP yesterday. They were firmer than other currencies, although they could not break the previous breakdown level when the dollar was strengthening, and that possibly will only happen if the CPI number comes out weaker than expected. Oil, as I said earlier, has taken a bit of a fall after the New York Times report, and that has supported the stock markets as well. Stock market was actually oscillating between minor losses and recovery, finally ending on a positive note. Even as there are no reports of major escalation in the war, excepting the Israelis retaliating very strongly. Whether it leads to a bigger conflict involving more nations or not is something that the market is still not discounting fully. Upcoming data is on the CPI, which shows a moderation in the core number, particularly on year-on-year from 4.3 to 4.1%. Even the headline number, according to forecasts, are expected at 0.3% only, which is quite, not as high as it was earlier. So we are waiting for this number. Other than the UK GDP as well today, which is UK data as well, which is likely to influence the GBP moves, which has been trading much firmer than many other currencies. Probably more rate hikes are being anticipated in UK. On the rupee, we saw a slight tendency to strengthen yesterday with some easing of buying pressures at the highs, and as the war in the Middle East seems to be not as worrisome for the long-term investors as initially thought. The current action on the war front have been anticipated, and we are not seeing a major escalation, though it cannot be ruled out altogether. So most global markets and the Indian financial markets have held up well, since the war, and the oil prices have not run away. So we look forward to the monthly inflation data from US and India, both expected to show moderation. More particularly on the rupee, after holding off a break higher and a lot of demand having been met at the last several weeks with RBI selling, a rupee could be due for a bout of correction towards 83 or slightly lower. Only resumption of inflows could see a deeper move down, while a lot of importers remain a buyer on dips. So technically, I would think a break and staying below 80 to 90 would only be a sign of stability and invite more selling. Otherwise, we should be confined to 83 and 83.30 ranges. Thank you.
Thank you, JK. And even though the PPI headline numbers were higher, but if you strip out the volatile components like energy and food, the number was actually not so extraordinary. We saw yields fall across the curve. Fed minutes didn't show anything different, but it has been superseded by Fed member speeches, which are much more dovish. Upcoming CPI numbers, US CPI number, and it is expected that the core number will moderate. We have got the Indian inflation data also today. When it comes to rupee eased off some depreciation pressures, and some correction is possible. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets. Thank you.